Hi, this is Graham Bibby on the 21st of October 2014. I just want to get this very rapid email off to you, this Camtasia, because I want to show you what's been happening in the US market especially, and I also want you to be aware that I'm sending you a special update on some amazing stocks that I've added to my watch list and why I'm really confident about profits for the future, and that this sell-off is setting us up even closer to the time then we get back to a stellar performance. But the last few days have seen a bounce in the market, and I just want to indicate when a bounce is a bounce is a bounce. So one of the stocks that's in our undervalued and superior growth list is Synaptics here, and you can see here where the arrow is, I'm just pointing to the right. In July this stock was nearly 95, and during the correction, because it started before the rest of the market, it went down to 65. Now that's a significant fall by anyone's imagination. It's 30 points, it's 30%, and then we've had this terrific bounce. I mean, last night this stock was up 5.5%, but I hope you can see that these tops here are all lower. This one now is slightly higher than this one, so maybe indicating a change in market direction, but the trend at the moment is still down, so nothing to look for there. And I want to just flick you through a number of stocks quite quickly. This is Celogen, and the biotech stocks are some of the greatest stocks we've got in our watch list. But again, here's the top. Just in September it was 97, and then it fell to below 85. That's 12 points, that's 15%. We've had a significant bounce back, so it's arguable now. The sales point to where we are now. Is there any difference? Might even be on the negative side, but we did break below this resistance, and we need to see what happens now. Now this is Spirit Airlines. Spirit Airlines has got one of the lowest PEG ratios of any of the stocks in our list, as has Delta Airlines. That is perhaps the cheapest, is Delta, but this stock was 75 and it fell to 54. Now that is a 30% decline. We've had a reasonable bounce. It was up 3.82% last night, but again, if you look at this, does that look like a trend that's going up or going down? It's a trend going down. Now Apple, you know I love Apple. Again, why have I exited it? Because I'm all about protection to the downside. Apple has also bounced back up 99.76, and I'm really sure that Apple is going to make us a lot of profits in the future. We just need to see where the overall market's going. The market action of Apple in particular has been very encouraging, because it didn't sell off as much as other stocks, went down a few percent, and now it's rallying back, so that's good. Super Microcomputers, another stock that's high on our list, that was virtually 30 and fell to 22. That's 8 points on 32. That's over a 25% fall. It was up 1.8% yesterday. NXPI, similar trend as you can see. US Silicon Holdings, look at this stock, shoom, almost 75 to below 40, almost a 50% decline. Here's Gentherm, going from 55 to 35. That's because people take the profits in the best stocks. It doesn't sound logical that you would do that, but that's what people do. I need to flick down here because this is one of the best PEG ratios I've got out there. It declined from, let's say, 110 to about 91. That's about an 18% fall, but this stock has forward earnings growth over 3 to 5 years of 23% per annum, and a forward PE of 10.9. So that is really cheap. It's less than 0.5 on a PEG ratio. Now let's just get on to the market index. There's the Nasdaq Composite, and you can see the negative trend that bounced up the last few days. Last night up 1.35, but there's no higher tops. These are tops, these are all lower. These are what are called bottoms. They're all lower. We've just got that uptrend, and I told you before, the Russell 2000 seemed to be leading the market, and this is the problem we've had this year. This big sell-off, rally back up, big sell-off, rally back up, big sell-off, rally back up, big sell-off. Now we're below the 1,100 level, which is a significant level to tell us whether a reversal in trend is going to happen or not. So for now, we're still on the sidelines. I'm doing more and more in-depth research. I've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 stocks that I'm going to write to you in an email about, which look exceptional on the undervalued to earnings growth. So I've still got my spread of stocks that are going to be great in the future. Many of these stocks by the general market have got price forecasts of 20 to 30% above where we are now, and any decline just makes that even more attractive. And if I look at the PEG ratios, these stocks should perform even better than that. So I just wanted to get this off to you to show you that this is a bounce in that downtrend. That's a significant downtrend here. We just bounced to this level. We're not even halfway up yet. So we've got to see what happens from here. For now, this is just a bounce from an oversold position, but I'm watching very closely. And when this does turn, I'll be ready to reinvest, and we'll have some terrific profits. I've seen this before, and no doubt it will happen again. So for right now, we're in the safe haven of cash, and I'm watching global markets, and I watch 46 in my Insiders Club, where we're using ETFs, 46 markets and sectors. So I will be one of the first to know if there's a change in market direction. Have an amazing week ahead, and if you've got any portfolios out there you're concerned with, because a lot of markets have been in significant downtrends, just please feel welcome to email me, send me confidentially what you've got, and we'll take a look at it, and we'll recommend what trends they're in, and then you can make a decision. So this is Graham Bibby on the 21st of October 2004, thanking you for listening, and I will speak to you soon. And if you're not in the Insiders Club, I strongly advise you to get positioned now. Open an account, get your funds transferred, and we will still be on hold until we get buys, but your money will at least be ready. So, and it is to future profits. Bye-bye.